Good everyone. This is LPT, and in today's video, I'll be giving you the breakdown of my GBPUSD sell, massive sell, and EURUSD massive sell, and why I still expect more sales from these pairs. This is a top-down analysis from the higher time frame, and this is also a swing trading model or position trading. So trust me, I want you to pay attention because there's a lot for you to learn in this video because I'll be breaking down every single thing that you need. So let's get started in this video. We'll be doing introduction later. So basically, for those that have been following me, I mean, if you are in my Telegram community, then you will know that I've made this analysis for you. I've explained why I'm expecting a massive sell on GBP and I was able to take the sales and made over 20K from this particular sale, and I'm still swinging the trade, and I will show you where I expect to take my profits and how I expect the market to expand more. Do you understand? So stay with me. So basically, yeah, we'll go back to the monthly time frame because that is like the source, that is like where the analysis came from, right? First thing first, I want you to pay attention to is that on the monthly chart on this particular Euro USD, market has actually been in downtrend, and no single time did market actually break uh, a bearish order flow. Market has been respecting bearish order flow right from this particular level, which is like 2018, and we are in 2026. That's about 2026 now. That's about 18 years now. The market has been respecting bearish order flow. And I do not think that market is going to break that bearish order flow for now. At least if it's going to break it, that is later, or at least it should do it now. But currently, we would follow what the market is doing. What the market has been doing back to back is what you are going to follow. So now, let me quickly break it down for you. For those that have been following me, you know I've done this analysis before. So if you look at the chart, you can see that at this particular level, which is what? This is 2008. Market form a high here. And in this particular play, which is 2009, market did a what? A mitigation on this particular level. Then after we have 2011, market did another mitigation. You can see that all of these high were protected. No break of structure to the upside, no liquidity sweep to the upside. Market was actually respecting what? Higher time frame structure. You know that most of the time higher time frame is always the real price action because you rarely see manipulation. Market will respect what's supposed to respect at any given time. Do you understand? So you will see that here again we had another mitigation at what 2011, a protected what? Protected high. Then again in what? In 2014, we had another what? Another mitigation in 2014, right? Yeah, we had another mitigation in 2014, which is also what? This protected. Then in 2018, we had what? Another mitigation in 2018, which means what? This are also protected. You can see that market has been respecting the bearish order flow. This is long-time analysis. This is top-down analysis. And I'm going to be referring back to this analysis in few years, I promise. So now, we can see that we are currently, here now is what? Is 2018. And in what? In 2021, we had another mitigation. Market again still respected order flow, still continue breaking structure. And now we are in 2020, what? 2026. And what do you think is going to happen here? We are expecting another what? Another mitigation, which means that this particular sell is just what? Is just the beginning. Are you getting my point? This particular sell is just the beginning. There's still a lot of sell that we're going to have before the end of the year. So now that we've seen that, okay, this is something that has been happening back to back, our market has been respecting the order flow, and we expect the same thing to happen in 2026. Now, if you move, let's move to more lower time frame. So we've seen that market got here and mitigated this particular order block, which is the monthly order block, and we've seen the market trade below and break structure right below here. Right below here. Because if you move to weekly, you will be able to see it. You can see that market break structure right below. There's actually a minor structure here. There's another one here. So we had the market then retrace back to the what? To this particular level or this particular other block. And it is from that other block I'm expecting the sell to continue. You can see that it's a top-down analysis. You can see all of the way we've seen market created liquidity, another high, the market expanded, seek that liquidity, tap into the monthly order block, which is going to mitigate the same thing that has been at the same level that we've had since 2021. So the mitigation happened now in 2026. I want to see the market pull up. And so you can see that from here, market tapping and market has been selling from there. And before the market sell, you will see that we had these few 3 weeks that actually consolidated. So this was actually what? A redistribution phase. Do you understand this? This is just a redistribution phase. And if you look at it on daily time frame, you realize that even for those that have been in my Telegram community, you will realize that during all of this period, I did not actually trade because market was just forming highs and low, highs and low, highs and low. Right? So I was not expecting the sale to start yet. I was still expecting the market should break out of this structure. I mean, this particular corrective phase, then market should continue to sell. But before all of this happened, before this mitigation happened, something also happened between Euro USD and DXY, which is what I called the SMT divergence. It is popularly known for mostly ICT traders, actually, right? SMT divergence, which is smart money divergence. So I'm going to show you how it happened, and I'm going to quickly show you what SMT is. Because for those of you that have not been following me for a long time, that don't know about SMT, I'm just going to quickly brief it. I'm not going to take much time here, just going to brief it and move there. So if we have a pattern like this and we have another pattern like this. So first of all, you need to understand that Euro USD and DXY are inversely correlated, which means that if Euro USD is actually selling, then DXY will be buying. I get my point. If Euro USD is actually selling, then DXY will be buying. So now let's say this is Euro USD and this is what DXY. So we expect that for every time that Euro USD a form a leg, DXY should also form what? That leg in the opposite direction. So if Euro USD come to seek liquidity above one particular high, then DXY should also come to seek liquidity at that particular low. So if it happens that at one point Euro USD was able to seek liquidity above one high and DXY refused to seek that liquidity below its own low, that is SMT divergence. It already means that the Euro USD was actually manipulated while DXY has already been buying, which means that they've already been buying DXY. DXY and Euro USD contain more liquidity since it's like the tradable ones. And this is just the dollar representative, right? So this can easily be manipulated. So it means that this sell has started already before market even get to this high. So coming to this high is to grab liquidity. So when you see this kind of thing happen, that is what we call SMT divergence. So it also happened between Euro USD and DXY at this particular level, which already told me that this particular correction, this particular thing that is happening is just a correction and it's going to definitely sell. Do you understand? So let me show you. You can see that in this particular, if you look at here now, look at this level. Okay, let me first remove this since I've explained it to you. Let's just quickly remove it. Now, you see that first, let me first explain this leg. Just for those of you that are still curious to understand the correlation, you can see this correction, then this correction, then this correction until market came this low. Now, if you go to DXY, you're going to meet the same thing. You can see this correction, this correction, correction until market actually came to take what? This particular high. You can see that they are inversely what? Correlated. Right? Now, you can look at this particular level now. When market was actually retracing back, you see after this impulse, this corrective phase, this consolidation phase, we have another block there. So the other block, market entered the other block and what? I started buying. And you realize that this other block was protected. Market did not even come and raid the consolidation that is here. And if you look at Euro USD, they sharply went above it. They took this consolidation. The other block that I said, they took the liquidity. You can see that it was even a very sharp candle. So they took this particular liquidity. So immediately they already did that. Taking this particular liquidity has already confirmed to me that it is actually an SMT between Euro USD and DXY, which means that while they are already buying DXY, Euro USD was actually going for what? For manipulation, which means that the sale is going to happen. So now the sell has happened. So the next is just what? It's just the what? It's just the retracement. So it's just what? The retracement, the correction for the market to continue to go. So all of this time I did not take because the market was not actually giving us chances that it's going to sell. It will just keep doing today, Monday high, Monday buy, Tuesday sell, Monday buy, Tuesday sell. So it was just consolidating until market got to premium level at this particular level, which you can call either the supply or the rejection block area. So when market got there, it took some liquidity, then that is when the market now started selling. Now, I've explained that SMT and I've explained where the market is coming from, which is the analysis I made, the top-down analysis. Now, there's one thing I want to explain to you again that I want you to pay attention to, which is the way I actually trade. So I'm a candlesticks trader. When I mean candlestick trader, it means that I focus on candles more than I focus on structure, more than I focus on every other thing. Which means that I'm that type of trader that when before tomorrow, I'll be telling you that okay, I have 90% chances that tomorrow candle is actually going to close bullish. So I can actually anticipate the direction of tomorrow's candle. And once I'm able to anticipate it, then I'll definitely get an entry and take that particular candle. I can take one candle and from one candle it can lead to two, while I'm holding can lead to three. Do you understand? So that's the kind of trader that I am. So how do I do this? For example, let's say I'm trying to catch a weekly candle, right? Let's say I'm trying to catch a weekly candle simply like this. Right? Let's say this is a weekly candle that I'm trying to catch. So how do I trade it? What do I do? What do I expect? I expect that for averagely, when the market is not actually really consolidating, when you are anticipating a healthy weekly candle, right? This is how you are supposed to expect it. So on Monday, we will see the market consolidate on Monday, right? And market can actually close bullish, right? Then on Tuesday, market will come and take the high of what? Of that Monday. Then on that Tuesday, Wednesday, Thursday, market will expand, and Friday, chances that market can also consolidate and close. So this is like the price action that I use to capture a weekly candle. So now I was already expecting this sell this particular week, right? I was expecting the sell. So what now happened is on Monday, you can see this is Monday candle, Tuesday, Wednesday, Thursday, Friday. I caught all of this move, right? So on Monday, I'm going to show you the screenshots at the end of this video. So on Monday, we can see that on Monday, market created this particular one, which with this particular um bullish candle, right? And on Tuesday, market went to sweep that high a little. So when markets actually grab liquidity above it, then market started selling, and that is like my framework. On Monday, the market should come and take the high. On Tuesday, the market should continue to sell. But that's not the only thing that now happened. What now happened again is that same thing that I explained here, it happened here again. That on Monday, that market still have time to go ahead and seek liquidity above previous daily high. On DXY, market could not actually do that. Market actually respected that low. that Monday low, market just opened and started buying, which makes this level with the Euro USD SMT divergence again. Because here now, market did not come and take any. You can see the gap sef. The gap between this particular candle and this one is much. So market did not even come near the low of that previous day candle, where Euro USD actually went ahead to seek liquidity there. That's another SMT divergence, SMT divergence, SMT divergence on the weekly, then SMT divergence on the what? On the daily, which is going to show continuation. So after that, then on Tuesday, we were able to actually take our trade. I think I took mine from Monday. I also take on Tuesday, and I'm going to show you. I think I took Euro USD and also GBP USD. Yeah, you can see on GBP USD own. Let me remove this. On GBP USD on Monday actually opened and first seek liquidity. So since the liquidity have been swept on Monday, market just continued to sell. So I took the sell from this level on Tuesday, and I'm going to show you where I this is my okay, this is my signal group. Let me show you on my signal group. You can see this is my signal group. I gave the signal here. I said GBP USD short, then entry now because I was on screen, which is 1 hour. The stop loss here 13550, which is a reasonable number to put your stop loss, right? And if you look at coming, if you look at I want to show you the entry from here. So this is the entry. I can never forget the entry. Most of my trades I don't forget them. So this is the entry. You can see here. Let me bring it back so you can see it. You can see this candle, see this candle. So you can see that is where the market has been selling from since then. You can see it. So that's that. And also you can see where is it? You can see the market drop massively. And also I also send the signal to my what? To my Telegram community, which is the free one. And I'm going to show you now. I sent the signal to my Telegram community because I was very, very sure that this market is going to sell, right? So that was why I sent the signal to my. I told them where is it? Where is the signal? No, we'll get there now. Yeah, you can see. I said expecting a massive sell on these guys, which is Euro USD and GBP USD today. So and I said GU new entry at 1.35341. Now check 1.35341. 1.3535, you see it. 1.35341 around there, sha. Yeah, 340. Then just one up. So just around there. This is the entry that I gave. So the market tap it and market drop massively. So now, if you go back to the higher time frame on Euro USD, if you go back to higher time frame on Euro USD, I took Euro USD personally. I sent the USD to the group. So if you go back to the higher time frame, you will see that the sell that I'm still expecting is still much very, very long. So which means that this week I'm still expecting a massive sell. And as a matter of fact, I'm not expecting consolidation. I'm not expecting anything because of what? Law of cost and effect. The fact that we've consolidated there, I want to see next week to drop massively. At least to tap this particular level first. That is our first draw on liquidity. That's our first draw on liquidity. And that is how we make analysis. And the same thing I explained is what I will be expecting tomorrow. Maybe tomorrow might not really move well. Then Tuesday, fire in. Wednesday, fire. Thursday, fire. Then relax for Friday again. Do you understand it? So this is how to do a proper top-down analysis. And I hope you are able to get one or two things from here. I've explained a lot of things in this short video. I explained the mitigation from higher time frame. I explained the SMT divergence. I explained my model, my framework on how to capitalize on one candle and what I expect. Do you understand? So you can backtest all of these things and you'll be surprised with your results. So for now, I'll see you in the next video. Have a wonderful time. Bye.